Yep, it's me, and here I am with my. It's Kenny Polgar, your host of the party, and today is April 13th, 2022, and a big shout out, happy birthday to my sister. All right, so what is it that we need to know, right? There are lots happening right now. We're in midweek. We got CPI yesterday, we got PPI this morning, along with earnings. So yesterday the CPI was hot. So the question is, how hot will the PPI be today? Earnings have begun, like I said. BlackRock already beats, it's no surprise. JP Morgan misses slightly on the earnings, but they see trading revenue surge amongst the chaos. Oil up 8.5% in 3 days, now trading at $102 a barrel and only going higher. Bitcoin fails to hold at 40,000, is 35,000 next. And what are we having for dinner? This is delicious. It's farfalle with sweet sausage, peas, tomatoes, and a light cream sauce. So good. Okay, so look, inflation accelerated to 8.5%, levels not seen in 40 years. The consumer price index coming in hot, right? The month over month coming in at 1.2%, up from 0.8%. But when you stripped out food and energy, why you would do that anyway is the first question. Then the CPI month only rose up 0.3% versus the expected 0.5. So the analysts are all saying, oh, that's so much better. But when you look at the year-over-year figure, the top line came in at 8.5%, up from 7.9. And when you strip out food and energy year-over-year, it still comes in at 6.5%, greater than 6.4% last month. So you say, that's not so much better. And you would be right. So yes, it's hot, and the administration is still trying to downplay it. The other data points that we got were real average hourly earnings year over year, and they were down 2.7%. And average weekly earnings year over year were down 3.6%. So hourly and weekly earnings going down, consumer prices going up. Sounds like something's moving in the wrong direction. Now look, the initial reaction in the markets was for the algos to try and take stocks higher, considering that they've gotten beaten up and slammed over the last couple of weeks. And that kind of made some sense since the algos were focusing on that lower core number of 0.3%. So swift move higher, led by bargain hunters and aided by massive short covering, only sent the indexes up the moment the opening bell rang. The reasoning being that the small decline suggests that the worst is over, causing some analysts to suggest that yesterday's inflation data indicates we are peaking, or at least near the peak, which I think is a very premature argument. And that became clear, right? And what became really clear, it was premature. CPI is not only hot, it's likely to remain hot in the months ahead, bolstering the argument for a more hawkish Fed. And stocks began to weaken, finding, right at 10, they hit their highs at 9:53, and then they started to weaken, and they found their lows at 3:30 p.m. before ending the day just off those lows. As of 4 p.m., we found the Dow down 90 points, the S&P off 15, the Nasdaq down 40. Both the Russell and the transports managed to end the day slightly higher, with the Russell up 7 and the transports up 31. Again, those two indexes have gotten really beaten up lately, so a small bounce does make some sense. In addition, we heard from two Fed officials, Jimmy B, right, St. Louis Jimmy B, who's always vocal and always a hawk, said that the Fed must move rates to 3% by year end, which is not a new statement by him. Now, he was also joined yesterday by Richmond's Tommy Barkin. Now, we don't usually hear that much from Tommy. So like Lael Brainerd, when he speaks, people listen. And he spoke, saying that the Fed should quickly raise interest rates to a level where borrowing costs no longer stimulate the economy, and should raise them further if high inflation persists. It's fairly aggressive. And just to be clear, Tommy is a voting member of the FOMC, right? The Federal Open Market Committee. So he does have a vote on policy, and it sounds like you know how he's going to vote. Now look, just a quickie here, right? So you understand, there are 7 Federal Reserve governors, and there are 12 Federal Reserve presidents, plus the chair. So it's a total of 20 people at the Fed. The FOMC is a subcommittee of that group, and that consists of the 7 governors and 5 of the 12 presidents, for a total of 12 voting FOMC members. Now, the presidential spots rotate every year on a rolling basis, which gives everyone a shot at policy at some point, right? Voting policy. They can be as vocal as they want, but if they don't have a vote, they don't have a vote, right? There's a difference. Now, what's comical here is that the Fed is now in a position to fight a fight that they actually created. They left rates low for too long, feeding the inflation monster, and now as a result of their policy, they are charged with trying to tamp it down by raising rates. Sounds kind of conflicted to me, but in any event, it is what it is. So sit back and watch as they move to raise rates by 50 basis points at the next 4 meetings, getting us to 3% by year end, a rate that is higher than they originally predicted, but one that is now the norm in the narrative, right? Everybody's been talking about it. They've been trying to prepare the market. So that's now the norm. 10-year treasuries this morning are yielding 2.74% after teasing as high as 2.85% yesterday, as some traders pared back on their expectations of how aggressive it's going to be. Again, I think that's premature. But watch out, because today we're going to get wholesale prices, right? The PPI, the Producer Price Index. And that is expected to show prices rising by 10.6%, year over year. If you strip out food and energy, it's up 8.4%. Again, rates not seen in 40 years. So the argument is expected to remain on the front burner. Yesterday, oil surged by more than 7%, taking West Texas Intermediate to $101 a barrel, up 8.5% in 3 days. And this morning, oil's up another 1% at $102 a barrel, as the supply story continues to suggest tightening. And this after Vlad vows to fight until he wipes Ukraine off the face of the earth. Remember, 2 days ago, OPEC also warned of tightening supplies due to the inability to replace the lost Russian oil anytime soon, and the release of the reserves from the Strategic Petroleum Reserve doing little to calm the markets, right? Remember, Joey and the IEA made that announcement, releasing all this oil is going to help tamp down prices. Not so much. We are now above all 3 trend lines in oil, suggesting that a challenge of the March highs, which is $120 a barrel, is within sight. Now, just on a side note, yesterday, Joey announced that he is going to allow high ethanol, known as E15 gas, to be sold this summer in an effort to lower prices at the pump, while also paying, and that move pays big political dividends to farm states and to him. Ethanol, you understand, is made from corn. So what is interesting here is that the high ethanol E15 gasoline actually contributes to more air pollution, bigger climate change, and global warming. But those issues apparently are no longer important at the moment for the Democrats. Funny how that works, especially with the midterm election only months away. I mean, I'm just saying. They scream and yell, scream and yell, scream and yell, and then suddenly they start, pumping out more oil that's going to pollute the air even more. The VIX remains a bit elevated at 23.75. Watch how it reacts once we get the PPI report this morning at 8:30. A surge high is going to suggest fear, while a pullback will suggest some complacency amongst investors. Today is also the official beginning of the beauty pageant, otherwise known as earnings season. And we've already heard from Delta. They missed. BlackRock handily beat the estimate, reporting $9.52 a share versus the expected $8.80 a share. Recall my comments about BlackRock last week in one of my notes, and then next up is JP Morgan. And what did Jamie report? 263 versus the estimate of 269. Top line revenues beat, while Jamie tells us that he still sees significant geopolitical and economic challenges ahead. But consumer balance sheets remain at healthy levels, and he's authorizing a $30 billion share buyback effective May 1. And while Russia could cost him $1 billion, the volatility created by that crisis helped trading revenues surge to $3.3 billion versus the estimate of $2.5 billion. And that is the theme that I'm sure we are going to see as this week progresses from the likes of Goldman and Citi and Wells Fargo and Morgan Stanley, etc. This morning, U.S. futures are up. Dow futures up 165, S&P's up 21, the Nasdaq's up 85, and the Russell is ahead by 14. It once again feels like a short-term bounce after the recent weakness, no matter what the PPI report says, because if it comes in at 10.6% as expected, then they will argue that it wasn't a surprise and that it's all priced in and stocks are short-term oversold and that the economy can handle the interest rate increases, blah, 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 because that's how that's going to go. European markets are mixed this morning. UK inflation is running at 30-year highs at 7%, and that's fed by the same soaring food and energy prices. The ECB is set to announce their policy rate decision tomorrow. So the question is, what will they say? What will Christine Lagarde do now that the Fed has made it clear they're moving, right? All eyes across Europe are also on today's PPI report and then what that will cause the Fed to do next. Bitcoin has broken 40,000 again. It is just trading just below at 39.5, but it's having difficulty at 40, and Ethereum is struggling to hold on to 3,000. And while they should not trade in tandem with stocks, they will react to a more aggressive Fed. Bitcoin is now below all the three trend lines, and a test of the February lows of 35,000 is not necessarily out of the question. Ethereum is sitting right on the trend line, and a fail here would see that also test lower to the 2,500 range, which is also the February low. The S&P closed at 43.97, failing to break up and through resistance, which is now 44.30. That was support, now it's resistance. Expected to test it this morning as the S&Ps are up 25 points right now, so it's going to kiss it. Again, we might get a bit of a bounce today, but I think the path of least resistance feels lower. So patience is a virtue in times like this. There's no reason to go rushing all in, feeling like, you're missing out. In any event, what do we have for dinner tonight? Oh my God, this is so good. Farfalle with sausage, peas, tomato, and a light cream sauce, right? It makes you feel like you're in Nonna's house, right? Comfort food. That's what this is. It's comfort food. It feels good in your belly. Okay, so for this you need the farfalle pasta, which is like the bow ties. You need Vidalia onion, a can of plum tomatoes, garlic, salt, and pepper. You need heavy cream, frozen peas, and sweet Italian sausage that you're going to take out of the casing, and some white wine. And if you don't want to use white wine, you can use chicken stock instead, right? Now, you want to heat the olive oil in a pot, you want to add the crushed garlic, and you want to add the diced Vidalia onion if you can get it. If you can't, just use a regular white Spanish onion. Same, right? Vidalia is a little bit sweeter. Saute until soft and then sweet. Next, you're going to take the sausage meat, which you've removed from the casing, crumple it up. You want to cook it until it's all brown. Now add 2 cups of dry white wine or the chicken stock and let the, if you do the white wine, let the alcohol burn off. You want to open 28-ounce can of plum tomatoes and rough crush them so that they're a bit lumpy, and add that to the pot with the sausage and let it simmer for 20 minutes or so. Season it with salt and pepper, taste and adjust as you need. Now you're going to add in, after that, you're going to add in 1 cup plus a little more of the heavy cream. You can use light cream if you prefer, but heavy cream gives it a richer taste. You're going to let that simmer until it thickens, about 4 or 5 minutes. Now you're going to add in the frozen peas. Leave it on simmer and stir it and then let it cook, right? The peas will thaw. Now, in a separate pot, which you've got boiling on the back burner, a salted pot of water, you're going to add the pasta. You're going to cook it for 8 minutes or so until it's al dente. Don't let it go too much. Strain it. You're always going to reserve the pasta water just in case you need it. You want to add the pasta directly to the pan with the sauce, stir, making sure to coat it all well. Add a handful of 2 of grated Parmigiana cheese and mix it. If it looks like it needs a little bit more liquid because it's drying out, add a ladle of the pasta water to moisten it. You want to serve this immediately in warmed bowls, put it on the table, and allow your guests some additional grated cheese if they want it. Look, it doesn't get any better than this. It's an easy dish to make. It presents beautifully. It's so good in your belly, right? It fills you up, and it's always great as a leftover. So make extra because tomorrow when you come home or you want to have it for lunch or you want something quick for dinner, it heats up well, so it's a great leftover. In any event, the day is getting started. It's going to be a beautiful day here in South Florida. It's about 85 degrees. It's not humid yet. Until tomorrow, have a great day.